Hey traders, welcome to the Forex Focus, the show where we look at the currency markets and we try and identify opportunities that could be setting up for the week ahead. Now, the idea of this program here isn't obviously to give you trading advice. I'm not authorized or regulated to do that. What I do is give you my opinions on the markets, and then you can take that away and look at the opportunities that I'm talking about and see if that fits within your portfolio. And hopefully it gives you a bit of a view as to what to expect for the week ahead, which will ultimately make you more profitable. Now, whilst we're talking about the week ahead, we also have to reflect on the week prior. So we need to look at the data that's come out to see how it's going to affect the currency markets. You know, often Forex traders or home-based traders specifically, they focus just on the trading setup. So they look at their strategy and they're trying to look at the specific setup that their strategy defines for them. But what they don't do, and what would really help, is that they don't sort of take a little bit of a step back to see what is the overall direction of the markets, what's the expectation, you know, of where the markets will be in 1 month or 3 months' time. And that will sort of give them a better idea as to where they want to position themselves and how they want to trade their own strategy. So, for example, you know, if we're looking at the longer term markets and there isn't any real direction there, then what you might do is you might decide to jump down a time frame or two just to be able to take more tactical trades as opposed to the more strategic trades. Whereas if you do have a sort of like a definitive idea of where the markets are going to be in 1 month or 3 months, and there's, you know, a really defined trend there, then you can afford to take those longer term trades. So you can take bigger position sizes, and overall you'll be able to make more money doing that. However, the state of the markets at the moment is kind of a little bit sticky. It's a little bit unclear. What's happened last week, if we do reflect on last week, is that we had two of the central banks come out and they gave us rate hikes. We had the Federal Reserve, we had the Bank of England come out and they gave us 25 basis point hikes, which is what really the markets were expecting, but they were very dovish with their statements as well. So what that means is that whereas they hiked interest rates, so they raised interest rates, what they said was that their conditional guidance would be that they would be looking to see what the data is before they make their next decision. Now, this is very different to what's been happening prior to these meetings. So if we go back to even the beginning of this year or, you know, middle to end of last year, the central banks were saying that they're in a rate hike cycle. So they're going to raise interest rates at this meeting and then they'll probably do it at the next meeting, et cetera, et cetera. Now, of course, there are no guarantees, but what they do is they leave enough clues for the markets to be able to price in those rate hikes. What's happened now and what happened at the previous meeting is that they hiked interest rates, but they said they made their forward guidance conditional upon what data is coming out. So, for example, in the US, the Federal Reserve, they're concerned with the banking crisis at the moment. They're concerned that the economy isn't going to fare as well, which is a stark contrast to a couple of months ago when they had really strong employment numbers and all of like the economic numbers about their economy was very strong. So they were in a position where they could continue to hike interest rates. However, now it looks like that isn't the case. And it looks like the economy is suffering. So they need to find that balance between saying, okay, we're going to hike interest rates, but also we need to protect the financial markets and the consumers, etc. Now, there's data coming out next week, which should be able to give us a bit more of an idea as to which direction things are going to go. So, in fact, if we jump across to the economic calendar here for a second, we can just go through this really quickly. So we can see that we've got some, if you take a look at the screen here, we've got some speeches coming out of, well, all of the central banks. We've got the ECB here, we've got the Bank of England, we've got the Federal Reserve, we've also got the RBA. So a bunch of the central banks are coming out with speeches, so statements from some of their members. So that will give us a bit of guidance as to what they're thinking. But then crucially, what we have is we've got a lot of confidence surveys. So we've got the CB Consumer Confidence Survey. Later on in the week out of the US, we've got the Michigan Consumer Sentiment Survey. We've also got some price index information. And we've got the GDP information as well coming out of both the UK. Do we have it? We've got it out of the US as well. I think it's earlier on in the week. And then we've got unemployment numbers coming out of Japan, retail sales coming out of Japan. So we've got a lot on the data front coming out. Not necessarily all top tier data, but certainly data that will give us an indication as to where the central bank may be positioning themselves at the next meeting. Now, here's the problem that we have with the markets at the moment. Currently, the central banks have to find that balance between fighting inflation, which is it isn't coming down as quickly as they would like, and also making sure that they don't sort of, they don't kill the consumer, they don't kill the economy and push their economies into recessions that are too hard to recover from. So whilst they don't want to raise it, well, they kind of need to raise interest rates, or they need to keep them high, they also need to start thinking about when are we going to cut interest rates. So that's what's going to be a challenge going forward for the markets. And that is what's going to be a challenge for our currency position. So if we jump across to our currency charts, you probably see this reflected in the price chart. So if you take a look at the Aussie dollar here, for example, the Aussie dollar is selling off. It's pulled back to a previous level of support. So we've got minor support here, which is acting as resistance. I was bearish this last week, and I'm still bearish. Looking at this price action here, I think that the market will probably go lower. However, according to the strategy, the way that I trade, I need to wait for a momentum candle to signal that move to the downside. If we look at the euro dollar, for example, so we can see that this is a bit mixed. It's broken up, but then it's pulled back a little bit. So we can see this break up and pull back over here. If we take a look at the pound dollar, that's literally in the middle of nowhere. So you can see there, and these are all the daily charts by the minute. And just bear with me for a moment, because I will get to how we trade and how we're going to, express our views and take advantage of the opportunities. But what I want to do is just sort of, lay the groundwork, first of all, lay the foundation so you understand why it is that we're going to look at the markets in a certain way. We've got the New Zealand dollar, which again is bearish, but sort of a little bit in no man's land here. So the market is starting to move sideways. The dollar CAD, similar thing. It broke up, then it pulled back. Then it looked like it was going to break up on Friday, and then it pulled back again. We've then got the dollar franc, which is the same thing. So we were looking for the sell-off here. The market sold off a little bit, but it didn't get through the lows. And then finally, we've got the dollar yen, which has been selling off a little bit, but not really going anywhere fast when you compare it to other price action, when you compare it to this sort of nice trending price action over here. So what do we then do? Well, my suggestion, the way that I'm going to play the markets is, of course, I'm going to pay attention to the longer term trends. But the problem with the longer term trends is the data is going to, create quite a lot of volatility, and potentially quite a lot of whipsawing in the market. So what you might get is that you might get negative hard data. So for example, the GDP numbers come out and they're negative. You might get in unemployment and the employment numbers come out being negative, but then you'll get inflation coming out and it will still remain high. So what that will do is that it will make the markets a little bit nervous about taking longer term positions, because that what drives the currency markets are interest rate differentials, or at least the expectation of where the interest rate differentials are going to go. Now, if you've got data that's coming out that's sort of mixed and you don't know which way the central banks are going to lean on when it comes to their interest rate policy and their monetary policy, then it means that you're not going to get those sustained trends. So what I suggest we do, at least for the next week, until we get a little bit more data, and perhaps we can have the price give us a little bit of an indication as to where the market will go, is I suggest we jump down to a lower time frame. Now, the time frame that I trade, the lower time frame, would be something like the 4 hour. You can look at the 60 minute, you can look at the 30 minute, you can look at the 2 hour, but I would suggest don't necessarily go lower than the 4 hour chart, and look for opportunities in the 4 hour. So if we look at the Aussie dollar here, what you could say is that the market is breaking down. You might wait for it to move sideways and then take a break through these lows here. Okay, that would be a way that you could express your bearish view. Now, what that does as opposed to trading the daily is, if you're trading the daily and you're waiting for that big momentum candle, you might end up having to wait until down here, at which point you're trading into the lows, which doesn't give you a high probability trading setup. So what we can do here by trading the shorter term time frames, we can be a little bit more aggressive with our positions. So we can take that initial immediate break and keep our stops in quite close. And they're what we refer to as being tactical trades. So short trades where we're in, we're out very quickly. They're more technical in nature. We aren't sort of following the fundamental trend because, to be honest, there isn't really one at the moment, and not a strong one anyway. So that's what you would do with the Aussie dollar. If we look at the euro dollar, we can see that the euro dollar is playing with a previous level of resistance, which is now acting as support. So if this starts breaking up and this starts trending to the upside, then you can take the opportunity again from the 4-hour chart. If we go back across to the daily chart, you can see that if we were to take an opportunity here, you'd probably have to wait until the market breaks above this high at 1.0934 in order to be able to take that position. But if we look at it from the 4-hour chart perspective, we can actually get in a little bit sooner. So before we approach those highs, giving us an opportunity there, as I said, to get in on what we refer to as a more tactical trade. So we get in there, we get out quite quickly. The pound dollar as well is playing with a previous level of resistance, which is acting as support. So again, the longer term charts, the daily charts doesn't really give us very much, but the shorter term charts shows us that there is an opportunity there to play the short term volatility. And again, the way that the direction would be to the upside at the moment in the pound dollar. Although I can see that the pound dollar personally going forward is probably going to suffer because things aren't looking too rosy here in the UK, and the markets kind of perceive that the Bank of England really are behind the curve if you look at the other central banks out there. So that's something where I think this definitely will be a tactical one, because I can see that if we go to the longer term charts, that this could roll over. And if we look at this in 3-6 months time, I would not be surprised if the markets were down here at 1.14, 1.15, in and around that level there. If we look at the New Zealand dollar, again, on the daily, it's really not so clear there. You can see that the market is moving sideways. If we jump down to the 4-hour, there's no real opportunity yet, but the bias is to the downside. So if the market starts to trend down, you should get an opportunity to sell into that. If the market starts to trade up, I would probably wait for the market to get above 0.6295 before initiating long opportunities. The dollar CAD on the 4-hour chart is looking like it could break to the upside. It is looking a little bit sideways in the moment, so no sort of true direction. We've got the energy is certainly bullish, so it is certainly telling us that the markets, if it's going to, if you force us to make a decision without waiting for the reaction, which of course we will wait for the reaction, but looking at the overall energy of this chart, it is bullish. Okay, we're above our moving averages, we're above the structure point, so we expect this to move up, but this might be one that is a little bit more difficult to trade because the technical setup isn't quite as clear as some of the other opportunities that we've spoken about. We look at the dollar franc. So the dollar franc here, we have a nice move down. We've got a nice pullback. This kind of looks untidy and ugly from a technical perspective. But if you look and you drill in a little bit closer, you can see that within the shorter term time frames, there is a little bit of harmony here. So if we get a nice momentum candle on the 4-hour chart, I think that will represent a good opportunity to sell this, and the dollar franc will end up lower towards the end of the week. Finally, we've got the dollar yen. So this one here, I don't really see an opportunity here, to be honest with you. I think on balance, we would see the dollar go a little bit lower. But this one, from a technical perspective, there isn't an opportunity yet. If we get a bit of a rally here, then it might be a case of selling the rally. So if the market comes up towards 132, so this previous high over here, then that could be an opportunity for you to then get in and start shorting the market. But where it is right now, I wouldn't take the opportunity. We don't have enough of a consolidation to be able to take the short through here either. So this is going to be one that you can kind of just sit there and monitor it for the coming days and weeks and see where it is. And if we do get the rally, then sell into it. Okay, so that wraps it up for this week. They're the opportunities in the major currency pairs. Now, they're not the only opportunities you can take. There are, with my private clients, we look at 30 different currency pairs. So whereas you may not see a clear opportunity here, you might see it in something else. Obviously, I don't have time, and it wouldn't be fair on my private clients for me to go through all of the charts that I do with them. But this should give you a bit of an inkling and an indication as to where the markets are heading for the week ahead. And what you would want to do is look at which one is the strongest. So is it the Australian dollar? Is it the pound? Is it the euro? And then pair it with something this week if you're looking at other currency pairs. So you might think that, the pound is particular, or the euro rather, it's not the pound, it's not really doing very much, but the euro is looking particularly strong. And then you might say, well, looking at that, maybe something else is looking particularly weak. You would then pair those. So hypothetically, it's not the case, but it might be the franc, for example. So you might say, okay, well, then I want to take a position in the euro franc because one is strong and one is weak. And that's the benefits of trading currencies, is that you can match a strong with a weak. You don't just have to take a position on one particular currency. So you have a multitude of different factors working with you. And that really, that's one of the benefits to being a currency trader and makes it so different to trading other markets. So try to do that where you can. What I might do is create a video where I talk about parallel and inverse analysis, which is essentially what that is. And it will help you get into better, higher probability, currency trades, which ultimately will have more of an impact on your bottom line. Now, if you liked everything that we talked about here, if you're interested in learning more about the way that I trade the market, so, learning my framework, then what I would suggest you do is jump across to my website. I'll post a link beneath the video here. So jump across to the website, watch the masterclass. The masterclass, I walk you through my entire trading framework. So what is it that I look at? How is it that I come to my trading decisions, which hopefully should be able to give you an idea as to how to approach the markets. If you're not already profitable, then it was certainly something that will get you, a good portion of the way there. And if you are profitable, then it's something that will improve your results. So no matter what happens, watching that masterclass and watching the framework, it will improve your results, because most of the information that you find out there on the internet about the currency markets is kind of repurposed information. So people will be talking about the stock market. They'll have stock market strategies and they'll apply it to the currency markets. The problem is that they're very, very different markets. The dynamics of them are very different. So you can't exactly trade them the same way. So if you're interested, as I said, I'll post a link in the description beneath the video here. Go across to the website, sign up for the masterclass. And then if you have any questions, let me know. Otherwise, if you enjoyed this video, please make sure that you like it, you subscribe to the channel, and you hit the bell so that you get a notification as and when these videos are uploaded, so you can be one of the first to watch it and you can really prepare yourself for the week ahead. Okay? So thank you so much for watching this. I appreciate your time. I know that, time is precious and you could be doing other things. So I appreciate that. If you have any questions about any of these setups, please feel free to post it beneath the video. Otherwise, I will catch you in the very next one. Take care now and have a good week.